When you look at the areas focused on, they are secular growth markets to withstand the pressure you're getting from tighter monetary policy, higher bond yields. The best way to do that, we think, is to focus on offense. Where are companies likely to beat numbers because of the strength of their business, the strength of their business model? We're generating lots of free cash flow, but growing top line in a more troubled environment. The most important, of course, is the development in generative artificial intelligence, productivity enhancing business applications that are coming from that. Those will all be unrolled over the next 12 to 24 months. And in the meanwhile, there's enormous investment going on in compute power to get ready for what's happening in artificial intelligence. So we think investing in that infrastructure layer where the compute power is being created is going to be very, very important. Secondly, we continue to focus on these really strong consumer brands globally that have direct-to-consumer business models where they control the customer engagement, the inventory, and are less susceptible to bad inventory practices and price markdowns. They control more of their own destiny. Thirdly, this transformational move in mobility, which of course has a focus on electrification, which we've been big proponents of over the years, and autonomous driving. They're both hitting at the same time, and there's lots of good technology applications there that are going to be important to get right. Healthcare innovation's also been very important this year. With our focus, as you know, has been on treatment for diabetes and obesity and rare diseases. In emerging markets, our focus remains on those very innovative technology platforms that are bringing access to goods and services, including financial services, to consumers across emerging markets. Industrial automation, coming on the heels of the move to electric vehicles and alternative energy, and the U.S. CHIPS Act. So you have a lot of factors coming into play that are driving an enormous upswing in U.S. manufacturing construction of leading edge manufacturing facilities addressing these markets. It's a very unique, positive inflection point for the U.S. Where we're going to bring leading edge manufacturing back to the U.S. So I can't emphasize enough how important this is to supporting GDP growth here for the next few years. We think it's a good time going into 2024 to have more of a focus on areas of the market that we think will reaccelerate than it is to be playing defense or be hunkered down. We think we're near the end, probably at the end of the tightening cycle, and 24 is likely to be a better market backdrop.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.